Alright, so I just wanted to make a quick video talking about the likelihood of us entering a recession. So we have the next GDP growth coming in at July the 28th, which is approximately about 30 days away. So why is this important? Well, when you have two negative back-to-back GDP results, what does that mean? That means you have entered a confirmed recession. What was the Q1 GDP growth? It was negative. It shrunk by 1.4% in the first quarter due to US trade deficit. We have the next one once again in approximately 30 days. We've got a lot of important things going on in the next 30 days. We've got the FOMC countdown literally in just under 30 days as well. So in the next 30 days, it is going to be very, very hectic for the markets, and there are a few indicators which can help you see in advance what the likelihood is of us entering recession. The most prominent one is oil. I know this is very, very boring to chart, and most people probably don't care about this, but the fact of the matter is, what happened the last time US oil went on a massive, massive run? It was in July 2008. We had a confirmed recession. This absolutely ran up. This decimated the markets. I mean, if we look at the NASDAQ, you can see back in this period in time, we had a 54% drop on the NASDAQ. I mean, that's moving like a shitcoin or moving like Bitcoin. So you can imagine if the NASDAQ, tech stocks, the SPY have these massive capitulations, you can only imagine what this could mean for Bitcoin. Bear in mind the SPY, the stock market ETF of the SPX, was down 58%. The NASDAQ was down 54%. So this is going to be very interesting to see how this plans out on Bitcoin. This is very important because Bitcoin started trading approximately around 2009 to 2010, and the last financial recession that we had confirmed was back in 2008 when we had that negative GDP growth. This is when we had a massive run up in oil, foreshadowing the negative GDP growth. Tons of US companies need oil, so when the price of oil goes up, it's just terrible for GDP, and subsequently your gross domestic product goes down. You're probably very, very likely to enter a recession, and you are going to enter a recession if you get these two negative back-to-back reports. So once again, Q1, we've already had negative GDP. The next GDP growth report that we have is on July the 28th. That is 30 days away. What do we have approximately 29 to 30 days away? We've got the next FOMC meeting. Bear in mind, the GDP in 30 days is an approximate. We don't have an exact confirmed date on that yet, so take that with a grain of salt, but approximately within the next 30 days. We're going to have the next FOMC, we're going to have the next GDP growth report, looking at US oil, looking at the fact that this is literally almost back at 2008 recession levels. This is really not looking good. And bear in mind, yes, we are having a monthly pullback, but we did this many times, time over time again, 1, 2, 3, 4, 5 times while we were entering a massive run up. And as far as I can tell, since we were around about these levels stagnating, 1, 2, 3, 4 1, 2, 3, 4 runs up before we topped up. Round about this level, looking at the start of the massive run, you've had 1, 2, 3. So in my opinion, US oil is probably very, very likely to take the last leg to the upside. And also looking at the DXY, the US dollar index, this is breaking out of a huge cup and handle pattern. Switch this over to the Heikinashis to smoothen it out a bit, and we've had a beautiful confirmed breakout of this. If the DXY moves up to 111, then US oil is probably going to shoot up as well. If we do see US oil move up, if we do see the DXY move up, what's this going to mean for the NASDAQ? The NASDAQ is at least going to drop another 25% to the 300-day moving average. The SPY is at least going to drop another 18.5% down to the 300. And bear in mind, in the previous recession that we had in 2008, this was a lot worse. We massively capitulated below these moving averages, and in fact we actually moved about 45% below these moving averages. So honestly, if you are hoping for a quick and easy bear market to be done like that, you'd probably, like me, be hoping that we do have a confirmed back-to-back negative GDP growth. It sounds kind of evil to wish that on the economy or wish that on the markets, but the fact of the matter is, if we long this out, we do have a slightly neutral / positive GDP growth in the US. Then this could just drag out for months and months and months, and then 3 months down the line when we have our Q3 reporting, if that comes out as negative GDP growth, that could once again mean the bear market could prolong itself out for another 3 to 6 months, and I'm sure absolutely no one wants that. I want more than no one for the dollar to take up a, well, I say this, but I think people just want everything to go up in crypto markets 24/7. It's not the reality. I really want the dollar to take its last leg up to the upside. I want it to top out at 111. I want to see US oil go on one massive run up, hopefully double top. If not, you know, create some type of double top formation and then come back down to the downside. And with this, I want to see the last capitulation on the NASDAQ, the stock market, SPY, SPX, and also the final capitulation on Bitcoin. So I will keep you updated on these. I will be tweeting about these on my Twitter in the last couple of days to the FOMC meeting and to the GDP growth report. Bear in mind, we've got about 29 to 30 days. I will keep you updated. That is all I've got for you today. As always, cowboy out. Peace.